Bajaj Finance trades more than 2% lower, is the top Nifty loser after the second quarter business update reflects lowest cross-sell rate to date, and AUM growth too is at a 6-quarter low.
M&M Finance is down 4%. At one point was down almost 7% after its second quarter business update reflects a 1% drop in disbursements and a guidance for higher NPAs.
Oil marketing companies, HPCL, BPCL, IOC, all of them down 2.5% as crude prices surge overnight to more than $77 per barrel. Meanwhile, oil exploration companies like ONGC and Oil India higher in trade.
Avenue Supermarts is also under pressure as its business update indicates standalone revenue growth of 14% in the second quarter, and the company added 6 stores in the quarter gone by.
Ola Electric lower in today's trading session, skids by almost 2.5%, even as the company launches its discount campaign for the upcoming festive season. You're watching us here on Chartbusters. I'm Manglam Malu. Today is Hormaz with me. And Hormaz, it's not out of the woods yet because we opened in the red. Thereafter, we tried to recover, go back into the green. As we speak, the Nifty Bank is inching mildly in the green. But rallies are being sold into, even though some of the dips are shallow.
Indeed, and the screen on top may not show that there has been a substantial recovery from the lows of the day, but the underlying picture still remains very choppy, as was the case yesterday as well. The Nifty continuing to trade in that 25,100 to 25,300 band, so we're finding support at that 25,100 levels, but just as you mentioned, the rallies are getting sold into.
All right, so let's see how that goes about. A lot to, reckon with, not just in today's trading session. We're going into a weekend as well. And in a choppy global environment, a weekend is too long a time as well. But let's talk about one company which has done well, which is Bazaar Style Retail. It's been about a month on the bourses. Recently listed company. In the last 2 trading sessions itself has seen a near 20% uptick. And part of that could be explained by their second quarter update as well, where the revenues grew by about 65%. We had same-store sales grew at 41% as well. Pradeep Kumar Agarwal, who's the chairman of the company, joins in to discuss the company's second quarter business update and, more importantly, the way ahead. Thank you, for joining in. The internals on products and revenue mix, if you could give that for the second quarter, I reckon it could be also on a favorable base. That's what we heard from players like V-Mart Retail, etc. And what kind of margins have you reported in, or margin improvement have you reported in the second quarter?
Good morning. We have our revenue grown by 65% in the second quarter, and if you see the overall half-yearly growth, it is 41%. And in first quarter revenue, that margin was 32.9%, and we are expecting that the revenue margin will be around 33 to 34% in the FY25.
That's the gross margin you're talking about. I'm speaking about the EBITDA margin, because in the first quarter, your EBITDA margins were closer to around 15%. I wanted to know whether they will increase going forward.
It will be better than last year, in between 16 to 17%.
Mr. Agarwal, good morning. Thank you so much for joining in. We are heading towards a festive season. We have a busy time for your company as well. How has demand trends shaped up ahead of the festive season, and how are things looking on ground as well? Are people now starting to look at gearing up for the festivities as well? How is demand shaping up on the ground?
Yeah, demand is very good. That's why we have taken the growth of 65% in this festive period. And this revenue has grown because of the festive season. This year shifted to 10 days before, and that's why this 65% revenue growth we have taken.
First half of this year, let's talk half and half. First half of this year, your revenue, like you pointed out, has grown at 41%. What is your outlook for full year revenue growth?
Yeah. We are chasing the growth of 25% for the full year.
25% for the full year. But first half, you've grown at 41%. You expect some moderation because of a high base in the second half?
Yeah. If you see the first quarter number, we have grown by 21% in the first quarter. And in second quarter, 65%, half yearly 41%. So if we average out there, then we are expecting that 25% growth will be there. It may be more, but we are expecting 25%.
Mr. Agarwal, how are you tackling competition? Because there you are in an extremely competitive market, and coming up to the festive season, how do you plan on tackling competition going forward? And if you can couple that up with what is your outlook on the omni-channel and the online sales as well?
Yeah, we are, competitions are there. We are doing very hard work and focusing on our product development, supply chain, and better display in our stores. That is our goal to chase the competitions.
Okay, but with competition coming in, real estate supply also gets limited. And you have this strong store addition pipeline too. You've added what? Closer to 40 stores in the first half of this year. What is your store addition target? And with competition coming in, is rent as a proportion of sales going to increase?
Yeah, we have opened 21 stores in this half quarter, 21 stores. And our target is to open 40 to 55, 50 stores in every year. And real estate is not the problem. That is one problem is that rent is no doubt increasing from the previous year. But in tier 2, 3 and 4 city, that is not the problem.
All right, Mr. Agarwal, thank you so much for sparing time and joining us to talk about the road ahead as well. Wish you good luck for the second half of FY25 as well. That was the management of Bazaar Style Retail. The stock seeing some bit of profit booking in today's session, now down almost 5% at 391. Time for a short break. On the other side, we'll be joined by Manas Jaiswal to give us a quick chart check. Stay tuned, back on the other side. Back with us here on Chartbusters. Choppy as choppy can be is the market. The Nifty now back in the green, now 19-20 points higher, nearing 25,275. The Nifty Bank is also seeing some bit of recovery now, nearing that mark of 52,000 as we speak. 0.3% higher is the Nifty Bank. Remember, that is the one that has taken the bigger knock as compared to the Nifty. So the 52,000 level will be the key to watch out for, seeing a bit of a spurt in the final few minutes of this trading session right now. 150 points higher now on the Nifty Bank. What is doing well though since the morning is the IT index. The Nifty IT is the top sectoral gainer. Over 1% higher is the Nifty IT. The earnings season begins next week, starting with IT companies, of course. The 500 points gains now on the Nifty Bank, the Nifty IT, and the PSU banks. They are the ones that are leading the Nifty Bank higher, almost 1% higher now on the PSU Bank index. So some bit of recovery coming in for the markets. Good time to get in Manas Jaiswal for a chart check as well. Manas, good morning. The kind of fall that you would have seen, you would expect some bit of bounce from oversold levels, but would you use those levels to sell out of your existing longs?
Good morning. See, we have seen almost 1,000 points correction in last 5 trading sessions, and today Nifty has taken support near 50-day moving average. However, I am not recommending a buy on Nifty at current levels, but definitely I am expecting a bounce back till 25,500 on Nifty. The trend is negative, but you can see a bounce back. So I'm not going to create short at current levels. I think one should wait for a breakdown, fresh breakdown below 50-day moving average. Then only one can create short position. And even in Bank Nifty, you can see a support near 51,500. So here also, I think one should create short position in Bank Nifty only below 51,500 now.
All right, a short only before 51,500. So seems like it's a bit of a no trade zone right now. Can't go long yet, and not enough conviction to go short as well. But individual stocks, what's your call here, Manas?
So 2 buy recommendations I have right now. So first one is from pharma space. Lal PathLab is looking strong on the charts because stock has given a fresh breakout on the chart. I believe this is a flag pattern breakout. So you can see the target of around 3,600 on Lal PathLab. Take a long position here. The stop loss should be around 34, 35. And second is from IT space, that is Coforge. Here also stock has given a flag pattern breakout. So one can create long position in Coforge also. Stop loss should be around 7,100 and target would be around 7,400.
All right, take that point. Thank you, Manas, for joining in. Currently, as we speak, Infosys has moved to the high point of trade from the frontline space. Tata Chemicals from the broader market is actually surging up around 5% from the lows, sitting with a gain of 2%, and has spiked to the high point of trade, and giving it company at the high point is Torrent Power as well. So Tata Chemicals doing well, Torrent Power doing well as well. It will be good to, just before we move on, pull up the intraday crisscross lines because now those lines are narrowing. We have more stocks advancing than the number of stocks declining. And there you have it. For most part of the early morning, we had a lot of stocks, declining as against the number of stocks advancing. And now those lines have, intertwined, and we have the lines moving divergent from each other with the green line much above the red one itself. We'll keep an eye out on this. We're still in choppy terrain, like Manas said as well. But the market decline yesterday led to investor wealth worth nearly 10 lakh crore wiping away. The Nifty registered its worst day in almost 2 months, and understanding the reasons for the fall, we spoke with Harish Krishnan, who's the co-CIO and head of equity at Aditya Birla Sun Life Mutual Fund. He believes that there is still some money moving to China, and let's hear out his view on the fall and the sectors that he likes right now.
Over the course of the last 2 quarters now, earnings have actually not gone anywhere. For the broader markets in aggregate, even as markets have continued to climb up despite a poor election result, despite the capital gains tax and poor earnings print. So I guess it is some amount of normalization is what one is seeing. The second, as you rightly pointed out, is the function of what's happening in China. Year to date now, China outperforms the US, India, in a surprising turn of events, right? 2 weeks ago, they were at 52-week lows. Come this week, they are at a massive 52-week high, outperforming almost all other markets. And this was a consensus sell, given various geopolitical measures and going into the US elections. And therefore, I guess some of the flow data that you spoke about, I think a lot of that has also got to do with the fact that there is some amount of serious money that is possibly going now towards China in the wake of a significant short squeeze that we've seen in Chinese market. So I think India is a low beta defensive market in the emerging markets. It typically does well when emerging markets, flounder. It's like the FMCG of the emerging markets. So we think that there are 3 dark horse sectors out here from a 2-3 year point of view that we want to further add on to our positions. First is consumer durables. That's a space that we think has done quite well, but we think that there is more margin pickup story out there as a segment as a whole. Second is metals. I think we've come to a zone wherein the metal stocks have delivered quite well. The balance sheets are in very good shape. And of course, there is the Chinese stimulus angle, but even otherwise, I think that metal stocks are something where ownership levels are very low, and we would want to add on to that. The third is cement. This is a space where near-term earnings can look potentially disastrous, but this is a space where there is massive amount of consolidation happening. Again, a space where ownership levels are low, and that is something that we want to pick up into. On the sectors which were in momentum or which are in momentum and which can continue and where we want to add on and buy on dips, I would say IT would be high up on that list. We also think pharma is an area where we want to add on dips. Third would be capital goods. Fourth would be auto, and real estate selectively we would be looking at buying on dips. So these are the broad sectoral, sectors, kind of a footprint that we would want to buy on dips into this fall in anticipation of creating greater value to our unit holders.
And the money moving towards China is something that Adrian Moat spoke as well yesterday. Now moving to our special segment where we get you a few ideas for profit from Money Control Pro. Nitin Agarwal of moneycontrol.com joins us to talk about a stock that he's tracking very closely.
The company that I have chosen for today is Craftsman Automation Limited, which is an auto ancillary company. There are a couple of factors that make us upbeat about the company. First, its aluminium segment, which continues to show a strong momentum. In fact, in the Q1 of FY25, the company, the segment registered a growth of around 16.7% on a YOY basis, driven by increasing content per vehicle and the higher adoption of electric vehicle by OEMs. The management continues to be very optimistic about the segment, given the new emission norm and the wider adoption of electric vehicle. Secondly, the company continues to do a show a strong momentum in the industrial segment post the election as the economic activity picked up. The company registered a YY growth of around 22.7% in Q1 of FY25. The management is optimistic in this segment as well, primarily driven by the growth that is anticipated in FMCG, pharmaceutical, and automotive segment. And the third and the last segment that the company is powertrain segment, which continues to which has moderated and shown a growth of around 8.9% in Q1 of FY25. The management continues to be very positive in this segment, given the north momentum that is being witnessed by the commercial vehicle and the construction equipment segment. Lastly, in terms of valuation, the company is currently trading around 29.4 times FY26 projected earnings, which we believe is at the fair level, and hence we advise investors to accumulate on any weakness.
All right, now the market shows some formidable recovery. The Nifty back at around 25,300. A good 50-point up move is what we were seeing from yesterday's close, but from today's low, it's a lot bigger on the up move, and it's led by the Nifty Bank. We're doing fairly okay on the Nifty Bank, up 300 points right now at the high point, and it's led by a couple of the public sector banks and a few of the private sector banks as well. Case in point, something like Axis Bank, that's the one that should come up for you. Alongside that, we have Kotak Mahindra Bank too, which is sitting with a gain of almost 0.5%. Fairly okay as far as the recovery from the lows is concerned, but then again, we're still in muddy waters. Take a short break, come back, get you more on the markets and individual stocks on the other side. The big boy seems to have woken up right now. Just pull up HDFC Bank and ICICI Bank. HDFC Bank was, muted for most part of this morning's trade, but now has moved to the high point of trade. And as a result of which, we've seen a concomitant increase in both the Nifty Bank as well as the Nifty. When we went into break, the Nifty was just about 25,300. A good 30-40 point up move has come by, largely courtesy HDFC Bank as well as ICICI Bank, over and above what we've seen on the Nifty Bank already. So let's talk about HDFC Bank itself. The stocks moved to the high point of trade largely because there are expectations of MSCI-related inflows, which may be likely, as the shareholding pattern for the company indicates some headroom available for this weight increase from the FIIs. Vivek joins in with the details of that one, the quantum, the expectation.
Well, that's right. So along with the quarterly update, as far as the business was concerned, HDFC Bank also went ahead and updated its shareholding pattern. Now, one of the worries on the street was the fact that, in case the foreign holding in the stock was more than the prescribed limit or more than the limit required in order for MSCI to go ahead and increase the weight, in that case, that would have been a worry. But however, the latest shareholding pattern indicates that the foreign room is at 24.97%, indicating that there is enough headroom as far as passive funds, that will be linked to MSCI are concerned, to go ahead and increase the weight in HDFC Bank in the upcoming November review. Now, IIFL Alternative Research estimates that there could be flows of close to $1.8 billion in HDFC Bank from passive flows on account of this particular weight increase. Just to give some perspective, remember, HDFC Bank saw its weight increase in the MSCI indices after, HDFC Bank as well as HDFC Limited merged. The first tranche of the inflows came in the August review, where the flows actually came in September. Along expected lines, almost $1.8 billion of inflows is expected even in the upcoming November review. One of the reasons why HDFC Bank is doing well today.
Vivek, thanks a lot for that. And with that, we call time on this edition of Chartbusters from Mangalam, me and the team that put this show together. Thank you so much for watching.
Yep. We'll take credit for this because when we started the show, all those screens were red, and now as we end, we're leaving the markets in slightly better hands than from what we started off. So from Hormazmi, thank you for watching.